Tesla vehicles in the US are seeing significant price cuts, and that's proving to be a double-edged sword for the electric car maker and the greater automotive industry. So today, we are going to talk about really interesting and freshest news about Tesla. So let's get started immediately. Hi. Tesla earlier this month slashed prices of its new cars by as much as 20%, making the vehicles more affordable and likely eligible for federal tax credits. But it also tanks the resale values of cars for current owners and is sending ripple effects through the auto industry. CEO Elon Musk hasn't directly addressed the price cuts, which are counterintuitive to his claims that the company's cars will be appreciating assets, a rarity for the market aside from classics and collectible vehicles. Analysts say the price cut suggests Tesla is prioritizing sales over profits, potentially signaling a demand problem. There's demand weakening, and they want to improve their sales, or it's a market share grab, said Michelle Krebs, Cox Automotive executive analyst. For the industry at large, Tesla's price cuts put pressure on other automakers to offer more affordable EVs despite rising commodity costs, creates havoc for used vehicle retailers that will need to write down the vehicles, and has Wall Street concerned about the first EV pricing war amid recessionary fears. Tesla's price cuts make all other EVs and internal combustion engine vehicles look incrementally more expensive, is margin compressive, and sends a chill across the used car market, Morgan Stanley analyst Adam Jonas wrote in a Friday investor note. Automakers change prices regularly on new vehicles. It's typically done through incentives or when a new model year comes out, but the adjustments, upward or downward, are historically small to avoid upsetting the automotive ecosystem for both consumers and car dealers. Musk foreshadowed such a move last month in predicting a recession later this year. Do you want to grow unit volume, in which case you have to adjust prices downward, or do you want to grow at a lower rate, or go steady? Musk said December 22nd during a Twitter Spaces conversation. My bias would be to say let's grow as fast as we can without putting the company at risk. Tesla reported fourth quarter earnings Wednesday after market close. When the price of a new vehicle drops, the value of the used models also takes a hit. In the case of Tesla, some of the new models were going for almost the same price, just thousands of dollars off, as their used counterparts. That's problematic for current owners as well as used vehicle retailers and Tesla, which sells used models directly to consumers. In the first 17 days of January, Edmunds reports, used prices of 2020 model year or newer Teslas dropped to an average price of $58,657. It's 24.5% off their June peak of $76,626. However, the move in the US may help Tesla qualify for more federal EV tax credits and stoke sales volume here and abroad after competition and interest rates increased. In Europe, Tesla cut prices on its Model 3 and Model Y vehicles in Austria, France, Germany, the Netherlands, Norway, Switzerland, and the UK. Reuters reported that in Germany, Tesla cut prices on the Model 3 and the Model Y from 1% to around 17%, depending on the configuration. Tesla's Model 3 was the best-selling electric vehicle in Germany in December 2022, followed by the Model Y. The company beat out Volkswagen and its popular electric vehicle, the ID.4 in Germany. Tesla's Model 3 at its discounted price is comparable to Volkswagen's entry-level electric car, the 3rd of October, according to the independent TV industry researcher Troit's Like. The price of a new Tesla Model 3 in the US has dropped between 6% and 14%, depending on configuration, and the cost of the Model Y dropped about 19%, also depending on configuration. The Model 3 is Tesla's entry-level sedan. The Model Y is categorized by some as a sport utility vehicle and others as a crossover. The company also lowered prices of its more expensive Model S sedan and Falcon Wing SUV Model X vehicles in the US. Generally, EVs qualify for tax credits in the US, depending on what form factor or category they fall into, their efficiency and range, meaning the number of miles they can travel on a fully charged battery, as well as the manufacturer's suggested retail price. The US government has delayed setting new rules about sourcing of raw materials and battery components to qualify automakers for a $7,500 clean vehicle tax credit until at least the end of March 2023. This means that Tesla and other EV makers can buy parts and critical minerals from suppliers around the world for now and still qualify for some EV subsidies. Those seeking to qualify for federal subsidies to need to complete final vehicle assembly of their electric cars in North America under current interim rules. The latest round of discounts by Tesla may set the company up to reap the benefits of EV tax credits in both the near and longer term, but it also risks upsetting customers who just agreed to take delivery of new electric cars from Tesla before the end of 2022 at higher prices. Earlier this month, Tesla angered customers in China by slashing prices on its Model 3 and Model Y cars there after many had agreed to take delivery at higher prices before December 31st. Some of the customers staged protests and demanded rebates, but so far, Tesla has not relented, according to a Reuters report. In late December, Tesla discounted its Model 3 and Model Y cars by about $7,500 to entice customers to take deliveries before the end of the fourth quarter. Tesla also offered some US customers 10,000 miles worth of free charging at Tesla supercharging stations if they agreed to take delivery before the year's end. Despite the discounts, in the fourth quarter of 2022, Tesla reported deliveries of 405,278 vehicles and production of 439,701 vehicles. The company had been telling shareholders to expect 50% in annual vehicle delivery growth over a multi-year horizon, but fell shy of that annual goal and analysts' expectations in the fourth quarter. Tesla is now facing more competition, higher interest rates, and slower consumer spending than in recent years, Bernstein analysts wrote in a note on January 12th. CEO Elon Musk sold billions of dollars worth of his Tesla shares last year, in part to finance a leveraged buyout of Twitter for around $44 billion. Since he took over Twitter and appointed himself CEO in late October, Musk has been splitting time and sharing some resources between the social media business and his electric car company. Tesla plans to report its 2022 fourth quarter results on January 25, 2023, and should share its new outlook for the year ahead then. And since this date is already behind, I, as always, come to you with the latest news, because now Tesla has just shared its news that I mentioned above. Well, it's much easier to say that Tesla cut their prices to boost sales as competition intensifies in both the mass and premium segments. So maybe it's the perfect time to buy a Tesla. Share with your opinion in comments, and don't forget to like and subscribe to the channel to be in touch with newest cars news.